I've seen recently, I've got a lot of questions around, can I buy a house with a current collection? So I want to address what this is, what this means to you as a consumer, what you need to do, and how to make sure you have a clear path to home ownership, even with collections. So the question again is, can you buy a house with collections, or if you've ever had collections before? So the answer is yes, but let's go a little deeper than that. The approval process can be challenging. So if you've had collections in the past, this can negatively impact your approval in a few different ways. And lenders factor this in a few different challenges with this based on income, debt to income ratio, or derogatory credit, or other restrictions. So the debt to income ratio, depending on how the lender has to factor in a payment for the collection, that can really move the needle based on your debt to income ratio, based on how much money you're making and how much your total debts are. Sometimes collections can be used at $0. Sometimes they could be used at what shows on the credit report. Sometimes it could have to be shown at 5% of the balance. And sometimes they have to be paid off completely. So it really can affect the debt to income ratio. Derogatory credit, depending on how much collection you have or charge-offs you have, and then if you get into judgments or liens, that could really affect things depending on how far this collection is gone. So we have to look at, as lenders, we have to look at the derogatory credit and if it's going to fit in the different loan programs. So that's why it's important to understand what the lender requirements are. And if there's specific requirements that you may be working with a lender that has very specific requirements and it may not be working out, you want to make sure you look at all options because there might be other options out there. But before you get into collections, or before you get into a collection situation with whatever lender you're working with, let's say a personal loan or auto loan, check with them before you take action on it. Understand what the guidelines are and what the repercussions are ahead of time. Sometimes you can't do that. So you also want to check with your mortgage lender to say, hey, I might have to go late on this. I know I'm pre-qualified, but how is this going to affect it? Or I want to refinance in the future, but I am going to have to go late on my car payment. How do you think that's going to affect it? If you go late less than 30 days, then that generally is not going to hurt your credit too bad, less than 30 days. Once you go over 30 days, that's usually going to show up on your credit report. And then if you're negotiating payment arrangements, this is going to be important. If you have payment arrangements on a lot of your collections, that could help, because if you have payment history on that and you have an actual payment plan, then, and it's in writing, that's key. Then a lot of lenders might be able to use the actual payment rather than using a percentage amount that they may have to use. And then get it all in writing. So very important to get whatever you're negotiating on with the lender that you're negotiating the collection on, get it in writing, or the collection agency, because they're notorious for trying to just get you to pay money. So really make sure you get it in writing. That's going to be extremely important to actually have it in writing for you, so you know exactly what to expect. And then you could document it with your mortgage lender of what you've been paying and showing that those payments are on time. The on-time payments based on the the written agreement could really help qualifying you, and showing that to underwriting can really help. And then monitor the account through resolution. So you want to make sure that once you're starting to pay on it, a lot of people will pay on their collections and then they just keep paying and paying, and they don't know what it shows on their credit report. So make sure you understand, you monitor it, and you look at what the actual outcome is. Don't just continue to pay it without knowing what the outcome is going to be, because you could throw away a lot of money to collection agencies and they'll be happy to collect it. So make sure you understand what the end goal is as you're making those payments. And then verify the debts owed. So handling old collections is extremely important to understand that. Make sure it's your debt. Don't just pay money. Hey, I want to clear up my credit. Okay, I'm going to pay whatever. Make sure you verify it's actually something you owe and something that you should take responsibility for. And if it is, great. Take responsibility, get the written agreements and figure all that out. But make sure it's your debt. So verify that. And then check the statute of limitations. You might have hit a time period where they're not legally allowed to collect it from you anymore. So think about that. It's going to drop off your credit report at some point. It could range somewhere between 7 to 10 years sometimes on dropping off in a credit report, but you might be able to hit the statute of limitations if it's something that's years ago. The key there is don't reactivate it. So if it's 15 years ago and it's a collection for it's an old cell phone, or used to see the cable boxes and things a lot. If it's something really old, make sure you don't reactivate it by paying it. If it's over, let's say definitely 10 years, some cases it's less than that. Statute limitations can really help you avoid paying unnecessary old collections from a collection agency. And then, like I mentioned, reactivating old accounts. If you reactivate it by making a payment or reactivating those, that can actually show up negatively as a new account on there almost, and it reactivates the timeline on it. So just be careful to not reactivate some of that if you don't have to. And then very specific type of programs can vary based on how collections are looked at. For example, so student loans that are in default can be a major obstacle for kind of federal programs. So think of FHA and VA loans can cause problems. If there's defaulted federal student loans, that's going to cause more of a problem. It still can be an issue on conventional loans or other types of loans, but not as much. So we have to actually, as lenders, pull information to make sure there's no late student loans for FHA and VA, and that can cause challenges. So if for some reason the lender's only giving you FHA option or a government loan program, take a look at Fannie Mae or Freddie Mac or programs called non-QM, non-qualified mortgage. There might be other options out there that you can avoid some of this. As long as your credit score is good, your debt to income ratio is good, then it all works. You might be able to still qualify even with defaulted student loans as the obstacle. And then understanding your credit profile and getting approved with collections. It's important that you understand your credit profile. How is that collection hurting you? What is that doing to your overall credit score? Because your credit score is also important, because you can have collections on there, but if your credit score is higher, it might be okay. But if your credit score is lower, that can be damaging to your pricing you get for your interest rates, or even just qualifying. And then you really want to explain the collections. This can be really helpful. Work with your lender, understand what those collections were and why you had them on there. And lenders really want to see that it's not going to continue. It's not a trend that's going to keep happening. So if you can negotiate or you can talk about what happened during that time period, that's going to be really helpful for lenders to get more context of what's going on, so you don't have to guess. Because guessing for underwriters is bad. You want to really give them a written explanation of what happened and why it's not going to happen again. And then negotiating the payment plans. Talked a little bit about getting the payment plans, but it's really important to negotiate on payment plans, because sometimes there could be some negotiation with the collection agency on how much you're going to pay them, when you're going to pay them, and how that works. So to make sure you negotiate on that. And then explore different programs. You mentioned on the last slide about how FHA and VA loans could be challenging for student loans, but they also be a little more lenient on credit scores and debt to income ratio. So depending on what the program is, you want to go a few different directions and make sure you have those options, because there's good points and bad points of these different programs. Namely, if you have student loan debt, you want to make sure what your options are and how to navigate that. Maintain all current payments. So it's important that even after you have a collection or after you have a negative thing on your credit or multiple, it's really, really important to start maintaining really good credit history after that. Because if you have collections, 3 years ago, and then you're good, and you have another collection, and then you have a judgment, and then you're good, and then you have another judgment, and you have a bankruptcy, that's going to be really bad for underwriting. But if you have an event, let's say 3 years ago, there's an event, you lost your job, and you went late on stuff, or a medical emergency, and then that happened, then you got back to work and you kind of got back to cleaning everything up, that's going to look a lot better than continual misses of payments and issues. So can you buy a house with collections? So the answer is yes, but it's the key to understand your situation and come up with a strategic plan with a mortgage professional and planner so you can understand what your options are. I recommend doing a soft credit check, especially if you have a lot of collections. If a lender won't do a soft credit check, work with a different lender, because we'll do both. If somebody's ready to go and they want to get a house right away, a lot of times we will do a hard credit check. But if somebody's in the planning mode, trying to get a house and figure it out, the soft credit checks are great, because we can go through, itemize all the items out and break it all down as a lender. and give people exactly what to do. We work with credit repair agencies too. So any good lenders should be able to give you some credit insight for themselves and on their team without just handing you off. But once it gets a little more complicated, a lot of the credit repair agencies really can get their hands dirty and kind of get in there and clean things up. Could be a really good solution. So coming up with a strategic plan is important, and preparing ahead of time is very, very important. So achieving homeownership is possible even with less than perfect credit history. The key is to understand that situation, create that plan, and then proactively manage those steps moving forward with your team, your financial team. You need a great lender. You need possibly a great credit repair company, and you need a realtor that's going to be patient with you and be able to understand your situation, because we may need to ask for additional seller credits or other things to pull something like this off to qualify somebody that might have damaged credit from the past. So to wrap this up, credit collections on your credit is not detrimental to buying a house. We'd love to put a plan together for you. Mortgage planning strategy call. You can go to my website at kevinbrierton.com or call or text us at 480-553-8770. Again, that's 480-553-8770. We'd be honored to help to put a plan together. Thanks so much for watching. If you enjoyed this, or you found this helpful, please like, subscribe, or follow for more, and we'll catch you on the next video.